Hi, everyone. Thanks for showing up tonight. We have a few more people coming in from the waiting room, but while everybody comes in, I am just going to um, talk about some housekeeping things and introduce our guests tonight. But I'm Debbie Schwartz, founder of Road to College and the Paying for College 101 Facebook group. And tonight we have two special guests, Dustin and Trisha from Student Choice, and they are going to introduce themselves, tell you more about Student Choice, and also a lot about the way they handle student loans, which is something called an education line of credit. And so you'll learn about that tonight. And before we get started, always love to know who is here watching. If you can put in chat what year of high school your student is in, if your student applied early admissions, or if they're still working on applications for regular decision. Absolutely normal, no matter, whichever phase they're in, just trying to get a sense of who is here tonight. And my little housekeeping is that we always do actually Zoom meetings. It's not a webinar. So I only share that because it's best if you can keep yourself muted. But if you want to, we also love when people go on video so we can see people in the audience. Always nice to know who's out there. This is recorded, so you will get a link to the recording tomorrow. And please feel free to share questions in chat. There's a lot of good information tonight, so I'm going to let Dustin and Trisha kind of go through a lot of their information because it might answer some of your questions. And then at the end, we will definitely circle back. I will gather the questions and we will answer as many as we can. So with that, I would love to turn it over to Dustin and Trisha to get started because there's a lot to go through tonight.
Yeah, there's quite a bit. It's a good time to do it though, and thank you for having us on. This is always a very exciting part of our days. And I'm coming to you from Dayton, Ohio. So if anybody's out here in the Dayton area, hello. Uh, I'll see you around. And Trisha is joining us from Indianapolis. So as a Colts fan, Trisha, I say very welcome hello to you. Um, so we're going to kick
Thank you.
off and get started. We've got a lot of content. We'll go through it, hopefully not too quickly, and absolutely throw questions in the chat. And then, as Debbie said, we'll record, and we're always available to answer questions should we run out of time and need to follow up after the fact. So I'll go ahead and get started. And Debbie, if the screen share acts up or anything funny, you just let me know, and I'll be happy to go back.
No problem. It's looking good now.
Awesome. So today we're talking about smart student financing from a credit union. So although this agenda looks giant, it's not as scary as it seems. We wanted to start off a little bit with who are we? Who's Student Choice, and what do we do, and how do we help? Uh, for those of you that are not credit union members or maybe aren't as familiar with credit unions as we are, we wanted to introduce the credit unions in general. Then we'll switch to the impact of all the recent legislation, and boy, has there been a lot. So some impact on families that are paying for college as well as those that are getting ready to repay. So we'll do a little bit of that at the end. We'll talk about our credit unions and the products they offer, which is the education line of credit. Very unique option out there, so we'll dig in a little deeper there. Then we'll talk about what a lot of folks are worrying about right now, which is second semester funding. And there's certainly some things you can do to cut down the need, and then some things we can do to prepare early next year. So we'll dive into that. And then we will wrap up with some questions that we got this past summer as folks were going to school. And as we are talking to folks, just questions we have come up that I think are always helpful to have. So first and foremost, I guess, why are we here? We are here to really help people. So we, as a company, were founded in 2008, and credit unions are these really cool not-for-profit financial institutions. They decided, hey, it's going to be really hard and really expensive to start a student lending company. If every single credit union in the country decided they were going to start a student lending company, that's outrageous. So they said, hey, let's pool our resources. let's build a company that can serve all credit unions. And that's how we came to be. So our goal at Student Choice is to help credit unions, and really it's to help people responsibly overcome the increasing costs of higher ed. And those increasing costs have never been more relevant because they are going up quick. And as things change, you need somebody to help you out with that. So what we have done then is we've figured out a way to match people with credit unions that they can borrow from, that they can join, and make that process a whole lot easier. Uh, so as we dive in, I think you'll hear a lot about Student Choice, and hopefully you hear a little bit of the excitement in our voices. But we're credit union people, and what that means to me is that I'm really excited to help people. I'm not getting up every day and looking at maximizing profit for somebody else. I'm here to help. I'm here to really empower people that are members of credit unions and help them find a really good solution. Trisha, before this, was just talking about how exciting it is when she has a day full of calls because she gets to help people solve these problems all the time. So it's really cool that we get to be a part of that, and I think you'll see that as we progress through the slides. Uh, what we do as a company is we help credit unions offer student loans and refi solutions. So we're sort of gears in the background. The good thing is that means we see a lot of different situations and a lot of different uh, types of things that come up, and we have lots of different answers, obviously, but we've tried to make that solution super easy so that borrowers, consumers, families, you can just compare your options real quick, find out what works best for you, and then move on quickly. So try to make it as easy as possible, and I think we could all use a little bit more of that these days. So across the U.S., there's kind of I guess a bit of a question mark out there, like credit unions. Am I able to join? Are there enough of them? Like, am I eligible? Uh, so these are the credit unions we work with. We have 212 current credit union partners all across the U.S. So we can serve any state. We can serve you if you live, work, worship anywhere. So uh, we've so far to date in the past 17 plus years helped 132,000 families and counting. That's a very specific number, but it ticks up every day. So very exciting to see how many folks we've helped actually go to college and pay for it. Maybe more exciting is the number below it. We've actually helped over 50,000 people pay those off, which I think is really cool because that also includes those folks that are paying off their federal loans, or they're paying off a previous refi loan or a high rate private traditional loan. And we're just making it easier for families to get through that and take care of their needs. So really cool to be a part of that. Uh, if you want to, sort of walk through the process of trying to find a credit union, you just have to go to studentchoice.org, and we walk you through step by step. It takes about 2 minutes to match with a credit union and compare their rates. So really easy process. So for today, I guess I want to lead off, and this will all lead into the fun part, which is Trisha, of, okay, credit unions. Why is that different? Why does that matter? Well, for me, the most important thing is that big, bold stuff at the top. They are not for profit. They are member owned, and they are financial institutions, which means they offer all of the banking products and services I would expect. Uh, what I love is that, I'm a member of a couple credit unions actually, and they're really focused on service, on the community. They take profits that do come in, because obviously you're paying interest on loans. Where's that money go? Well, it goes back into the community. It goes back into better products and services for members. And oftentimes that money stays local and does good things locally, which is pretty cool. Uh, they do return that money in the form of lower rates, fewer fees, better savings rates. You'll see all those benefits. A lot of credit unions these days are actually giving that money back to their members in the form of special dividends. So, if they have a good year, then they give it back, which is really cool. So, it's a wonderful thing to see out there. This is a bit of a breakdown of what we think and what we see out there are the most important things to look at when you're comparing a credit union and a bank. Now, we're not here to bash banks. Banks do a lot of really great things, and certainly we all have needs for different kind of financial solutions. Uh, But for some, credit unions are going to be a really good fit. And for student lending and paying for college, I think that's a really good way to go. So I did mention they're not for profit. So that means that any money they make, they have to keep the lights on, got to pay employees, but everything else is returned back to the members. The members are people that actually use the financial services. So the entire credit union is owned by the people that use it. So they can't be bought, they can't be sold, they can't be acquired. They can only be owned by the members that use them, which I think that's really cool because you actually get to control what your money's doing. Their primary goal, and this is actually stated in the financial bylaws and all the regulatory stuff, is hey, we're here to serve the financial needs of members. And it used to be really tough to join credit unions because you had to work a certain place or you had to worship a certain place or go to school somewhere. Now it's super easy to join because they have opened that up a little bit. So if you use our matching tool, wherever you work, wherever you live, wherever you go to school, you can put all that information in and we'll find you credit unions that match all those little pieces. And there are a lot of credit unions that serve the whole US now. So it makes joining super easy. And obviously, anywhere you decide to borrow for paying for college, you're going to have to be a customer there. For a credit union, you become a member and become an owner. Obviously, tons of branches and ATMs and you name it across the way. This is the one that I was mentioning at the beginning. Their board of directors is volunteer. It's not paid. They work in the interest of the members, not voted in by shareholders. That makes a difference because then they do stuff like create student choice. If we were solely driven by let's go make a bunch of money, we probably wouldn't do a lot of the things we do, which is really in the best interest of people, not in the best interest of profits. I think that's okay. And the last one, of course, they are federally insured by the insurance agency is called NCUA. Banks, of course, insured by FDIC. Same thing, different name. So important distinctions there. Good little reference. But for me, it's really more about how they show the difference than some of these things. So I'm going to flip it over to Trisha, and this is, I think, what we're all excited for. So Trisha.
Thank you, Dustin. Great information. And I just want to add a little bit about credit unions. It's very exciting to partner with all of these credit unions. I was a credit union employee for many years before I started here. And the philosophy of people helping people, that's what we really believe in here at Student Choice. And as I'm talking to families and counseling them every day, it's just so very, very rewarding. And we're very passionate about helping our credit union members. So changing student loan landscape. So we're going to get into some of the big changes that have come due this year and talk to you a little bit about why the landscape is moving and has changed so much and why student choice and our line of credit could really benefit you. So number one, the college cost and aid just continues to grow. The average tuition and fees rose 4.5% the year over year. Grant aid lags inflation, creating significant funding gaps. So the cost of college, I think we're all aware of that, right? The cost of college is going up. Federal funding, grants, college aid, state aid has not increased. So it's not catching up with the cost of college. Also, a big impact is the One Big Beautiful Bill, better known as, we call it the OB3. The new federal legislation, it's one of the biggest changes since 1980. It's a very, very big change with the federal student loan programs. And we're going to get into all of that here in the next few slides. And then also federal changes shift borrower behavior. So families now you're going to have to be looking for flexibility, stability, and control over your borrowing, and you want to borrow smart. That's what we're here for, to help you this evening, to help you make those decisions and for you to understand what is going on in the world of college funding. And one more, Dustin.
Yeah, sorry about that.
All right. No,
My
that's
mouse,
okay.
yeah, my mouse
So
decided to take over.
one big major change with the federal loans, borrowing caps for the Parent Plus loan. So the Parent Plus loan is a loan that a parent could take out. So one parent would take out and could borrow up to the cost of attendance or the unmet need for their student. Now there is a cap of 20,000 a year per student. And I don't believe you said this, Dustin, but all of these changes are going to come into effect July 1st next year. So July 1st, 2026 is when all of these new changes will go into effect. So again, so parents of undergraduate students used to be able to borrow up to the cost of attendance, less other aid received. So basically whatever the unmet need is. Now it's going to be capped. It's 20,000 annually, and that's per student, and it's 65,000 aggregate limit per child. So that's quite a bit of difference compared to what parents are doing nowadays and what they can borrow through the federal Department of Education. That's why it's, parents, beginning next year, going into the 26-27 academic year, are going to, have to savvy and understand, what they can borrow. And they're going to be looking at private student lending and such as the line of credit that our credit unions offer. And you can go ahead and jump. This is really, I think, one of the biggest impacts, and these are for our graduate and professional students, the elimination of the Graduate Plus loan. So the Graduate Plus loan is for grad and professional students. And again, it would cover the cost of attendance minus any financial aid that they already received. So it was basically covering their unmet need. And it was a loan that was pretty easy to get. They didn't have to have a co-signer. Well, it's completely being eliminated as of June 30th, 2026. So again, as of the 26-27 academic year, grad students will have to look elsewhere for funding. Thank you, Dustin. There are borrowing caps. So there are still graduate unsubsidized loans for the 25-26 academic year. They can borrow up to $20,500 per year. There are some medical degrees and some professional degrees that will allow $50,000 a year for some professional students. And students will know this when they do the FAFSA will still be completed. So they'll complete their FAFSA, get their financial aid award notification, and the schools will let them know what they can, what they get in the graduate direct unsubsidized loan. So again, the existing right now, they get up to $20,500. For medical students, they usually get up to about $40,500. And for the new 26-27 academic year, they can get up to the $20,500, but the lifetime cap is reduced to $100,000. So that's a decrease from 138. And then professional students can borrow up to $50,000 per year, depending on what their degree is or their academic discipline, with an accumulative cap of $200,000. This is a big change, and we're going to later on during the presentation talk. We do also have not just for undergraduate students, but we also do offer a graduate education line of credit that we'll talk a little bit about later in the presentation. Some additional changes. Repayment plans will be simplified. So right now with federal student loans, you have 4 to 8 different types of repayment. You have a standard, you have a graduated, 2 types of graduated, you have an extended, and then there's income-based repayment plans that offer forgiveness after you pay so many years. So with the new loans, and this begins July 1st, 2026, you're going to have 2 repayment. You're going to have a fixed standard plan, And the number of years is going to be based on the balance of your loan. And then there's going to be a new income-driven option called the RAP, or the Repayment Assistance Plan, which has a $10 monthly payment and forgiveness loans after 30 years of repayment. So that's it, 2 repayment plans. So a lot of that is a big change. And then also there's going to be some institutional changes for schools that have graduating students and they're not earning more than what a high school graduate would earn. So they're going to lose some of their federal direct loan eligibility. And Dustin, you can move forward. So let's talk a little bit about what is a private education line of credit. So this is an alternative to the traditional private student loans, and we're going to really dive into how it's different. But number one, it's basically, that's it. It's a line of credit. You complete the application. If you're approved, you get a line of credit that you can use for your undergraduate degree or a graduate degree. You only use, depending on the credit union lender that you borrow from, that's going to set the maximum limit. You don't have to use that limit. Let's just say you get a $75,000 approved limit. You do not have to use all of that. You're not accruing interest on that. You only pay back what you use. So if you only use 40,000, that's all you pay back and that's all you accrue interest on. A traditional loan, you have to apply for each year. So every year of your undergraduate or every year of your graduate degree, you have to complete a new application. And we can go ahead and move forward. So how is it an education line of credit different? Number one, it's only available from credit unions working or partnering with Student Choice. We have credit unions that have very low rates. Each credit union sets their rates. Fixed rates as low as 4.74, variable as low as 3.78. And again, that's determined, the pricing is determined by credit unions, but we have some very competitive players, some lenders out there, flexible repayment options. So you can defer your payment until 6 months after graduation or separation from school. A lot of people make interest-only payments because that really does cut down the cost of that loan and that line of credit. Or you can make full payments while in school. Some people choose to do that. And also keep in mind that you can change it. So if you start out with deferring the payment, the second year you can start making interest-only payments or making full payments. There's never any type of prepayment penalty. There's also
Hey, Tricia,
co-borrower.
sorry to interject there real quick. I have one thing that did pop up that I just want to make sure to call out as we're talking about rates is these aren't teaser rates. Credit unions actually have to offer rates that a good chunk of people can get. It's actually part of how they're created, which is really good for consumers. So they're really open about what credit you need to get the good rates. So if you go to studentchoice.org, our finder has rate tiers. You don't have to do a soft credit pull or anything like that. You just literally tell us, hey, here's how my credit is. And we'll tell you your actual rate. So these are real rates that real people do get. You don't have to have an 850 credit score to get a really good rate. And you can actually go play with the tool and you'll see what the different credit tiers look like. And if hey, I've got an 800 or I've got a 750, you can see what that does for your payment and your interest. But those aren't teaser rates that only like 2 people get. I'm really excited about that because that's a big difference that credit unions do offer. So
Yeah, and I think that's a great point. I don't know,
Yes.
Trisha or Dustin, if you want to expand a little bit and maybe just explain to people when you say teaser rate, what that really means. Because a lot of times
oh yeah,
people do see, in ads or online,
yeah,
rate as low as whatever, 3.2%.
yeah,
And then it's like hardly anybody gets that. But how does the lender get
yeah.
away with actually saying that that's an actual rate?
Yeah, good question. Yeah, teaser rates, yeah, just like the old bait and switch, right? Where you tease somebody with a good rate and then they come in and they get the, 14%. And it's like, what? Meanwhile, you've done a credit pull already and you're just, kind of stuck. That's not the case with credit unions. They actually, just by the way that they're designed, they have to have a certain amount of people that are actually able to get the rates they offer, right? So they can't just say, oh, if you have an 850 credit score, you can get a 3.78% APR. They actually have to have a certain, percentage of the members that can get that. So oftentimes you'll see that their credit tiers are a little easier to understand. And truly, if you go to studentchoice.org, we actually list them. We're just like, hey, you've got a 660 to 7, you've got a 7 to 725, or whatever the numbers are, uh, and we'll show you the real rate. So we're not basically setting a rate that is like, oh, it's exciting, it's a 378, and then it's for an 850 credit score, and oh, by the way, you have to make $200,000 a year and go to Harvard. Like, no, this is available to everybody. It's not one of those rates that drives you nuts when you apply and get something different. So um, yeah, that's one of the things that we were really excited to do with our Finder tool was show people what's really happening and do it in a way that doesn't require your social security and a blood sample and your fingerprints. Like, just tell us how your credit is. We'll tell you what your rate looks like. So I hope that helps. That's kidding aside about how much you have to enter, we really don't want to have to get people to enter so much information just to get a rate. You should be able to get your rate. It's not that hard. So that's what we mean by no teaser rates. What you see on the site is literally what is in our system, and what the credit union will give you if you apply.
Yeah.
Yeah.
Thank
There's,
you,
yeah, of course,
Dustin.
there's other, credit quality and things that go into it, but uh, what you see is what you get, which I think is important.
Yeah, it's truly based on your rate. That's easy. You don't have to open up accounts and jump through hoops, like you said. Yeah. So thank you for adding that. So back to, how is an education line of credit different? Again, it's only offered through credit unions. This is the student's loan. So the student would take this out, and then oftentimes they, may have a co-borrower, because the co-borrower's, credit is probably going to be a little bit stronger, and that might help the borrower to get a lower interest rate. And there's also a co-borrow release option offered by most of our credit union partners. And this covers all of the related expenses, including tuition, whatever, I always say, whatever is education expensive listed in that cost of attendance. So that could even be transportation cost. And you can borrow up to the cost of attendance minus any financial aid needed for the student for that academic year. Thank you. So how does it work? And we talked a little bit about that. Again, this is the student's loan. It's a one-time application with reusable line of credit. So you complete the application the first year, submit all the paperwork, and boom, you get the line of credit set up. You are only charged interest or accrue interest on what you use. And you only, pay back what you use. And so then let's just say you need money for summer school or that second semester. You can either do your draw request or ask for funds by semester, or you could do it for the full academic year. So let's say the first year you did it for the full academic year, and then you're going to go to summer school because those summer classes are a little bit cheaper. So that helps the cost of your education. You can simply log into your line of credit account and complete a draw request, or tell the credit union how much you need, and then that request is sent to the school. Everything is sent to the school. The school must certify the amount, and then they set the disbursement dates, and then we do fund directly to the school. So again, only borrow what you need when you need it throughout your college education. And this is a loan. A lot of times I talk to people and they ask, well, should I do the federal loan or should I do the line of credit? And, we can't tell people, right, where to go, but we can, give them the differences and teach them, give them that financial literacy to help them borrow smart. And the line of credit is a good way to go. So let's talk about a traditional private loan and the education line of credit, and what does it look like over 4 years? Okay, so with the traditional private student loan, you're going to have a new application each year. So we're going to use an example of a freshman going into college. So every year, every spring, around May or June, you're going to do a new application. You're probably going to have a new rate, a new payment, and a new loan. So when you graduate from college, you're going to have 4 loans, 1 per year. With the education line of credit, again, you get that line of credit set up. You borrow what you need when you need it. You apply one time that very first year. That second year, there's no more paperwork. You simply log into your account, complete your draw request as you need them. That could be, again, by semester. You have the flexibility of doing it by the semester. You can do it for the full academic year. Keep in mind, if you do the full academic year, it is split between each semester. So let's just say Dustin needed $10,000 for that academic year. Only 5,000 will be dispersed in the fall, and then the other 5,000 will not be dispersed until late December, early January. So you're not being charged interest on that full year amount. And then your rate and your repayment, you know what that's going to be with the line of credit. So once you graduate from college, that's what you have. You have 1 line of credit that you're going to repay versus 4 loans. And Dustin, did you want to add anything here?
Is that because you know that I've taken the loan, Trisha? Yeah, I'm a personal example of this. I was fortunate enough to go back to grad school, and I used this loan to do it. So I can tell you it worked out really well for me, and literally log in and hit submit. I mean, it probably took me longer to remember my password than it did to actually get more money. So yeah, you go in and apply literally one time. And if you're doing this for 4 years for an undergrad student, or you're a grad student doing it, it makes a lot of difference to only have to do this one time and then you're set. So yeah, for me it was apply, and then I went back actually the next semester and got additional funds. And then the following year I requested for the whole year. So ended up with a couple disbursements there. So yeah, the line of credit being sort of one and done sets you up for your entire college career. That's huge, and I can personally vouch for that. We did also get a really good question that I wanted to answer for everybody. It was about the student, because we did say this is in the student's name. So the question was, will the parent be the co-borrower? Is the student's rating taken into account, or lack thereof? That's a really good highlight. So if the student is the primary, that means we have them on the loan, and the loan is in their name. If there's a co-applicant, we use that person's credit, right? So that way, if your student does not have any credit, literally 0 credit, and you're the co-borrower, we use your credit score. That way they can get a good loan rate, and we can start establishing that credit history. That makes a difference then, obviously, as they graduate, because it's their student loan. It's not a parent loan to pay back. So that's one of the unique benefits of the line of credit. As payments are made, then they do post to the student's credit, so they can start building that credit history. Trisha, you run into this all the time. Do you have anything to add?
No, I think that's I mean, you answered. I'm glad that you answered that. I did see that question come through, and I think that is very important that you know, if they have the co-borrower, we touched on it a little bit, that the rate is going to be determined by their credit score, and it's okay if the student borrower, has a 0 or no credit at all. But I love the fact that it's in the student's name, and they are beginning to establish some credit while they're going to school. One thing that I just wanted to add on that, the co-borrower does not have to be a parent. A lot of times grandparents, grandparents always want to help, right? They always want to help the grandchild, and maybe they don't have the monetary means to do so, but they could be a co-signer, which would take that responsibility away from a parent. So that happens a lot, but it could also be a friend, or another relative representative or maybe a mentor. So the co-signer does not have to be a parent. And then also on the line of credit, if there is a co-signer, they can actually go in, they'll have a login credentials as well, and they could go in and do the draw request for the student at any time. Okay, we were just talking about this, unlock better rates with a co-applicant. So thanks for the lead in. Flexible repayment options. We talked a little bit about this, but let's talk about this again, because if you can make even just, and I always start with, I talk about this every day, all day long. If you can just make interest only payments, you can see just, this is just a simple graph, but you can cut down the cost, the overall cost of that loan tremendously just by making interest only payments. And it's real easy to, figure out what that would be. If you sign up for interest only payments, you actually would get a statement. You can sign up for electric statements, or you can get a paper statement, and make that every month. You can set that up automatically. And then you can also make immediate repayments if you want. That's really going to cut down on the cost of that loan, over the life of the loan. But you can also do the fully deferred. And you can do the interest only and the fully deferred up until 6 months after the student graduates or drops below half-time status, or basically separates from school. And also what's important, if say you do sign up for interest only or immediate repayment, or even the deferred, you can change that. So you can contact the servicer and say, hey, you know what, I've been deferring, but I want to start making payments, right away. So that's very important. That goes in with the flexibility of all of our repayment options. Second term funding, and this is a good time of year to talk about it, right? You don't want to wait until the last minute. Again, costs that are covered, if you've reached, maybe your federal loan limits, maybe you're a senior in college and you're like, oh no, I need, 2 more classes, to get my degree. Maybe you're a transfer student and, tuition is a little bit more, or room and board is a little bit more. So this is a good, and critical time, for families if you need the extra funds. And this is where, a line of credit could be really easy for you. And you can actually apply for it now. And one thing about the line of credit that we haven't mentioned, you can actually get it set up. Let's just say that you might need money for second semester. You're not sure. You can go, but you're going to need it maybe for summer session or the 26, 27. You can go ahead and do the application. You don't have to put a loan amount in there. So you could set it up, get the line of credit set up, and then you just have to be sure to take a draw request within the first 18 months that line of credit is open. So that's really, I think, a great benefit as well. And for second semester funding, if you using the line of credit by semester, again, the flexible access, you simply log into your account. So you have a username and password. You only borrow what you need, and then it's a very quick processing. So once you tell the credit union how much you need, which is the draw request, then everything, the certification request goes to the school will certify it, send the disbursement dates, and then again, the funds are dispersed directly to the school. And we talked a little bit about this. We also have an education line of credit for graduate students. This is a topic that's becoming very, very familiar and common now with the Grad Plus being eliminated. And the line of credit that we had, and we've had this program for several years, and it's a great program for graduate students. The limit is going to be determined, by the credit union, but you can again borrow up to the cost of attendance minus any financial aid received. So basically the unmet need. And again, so the graduate student only has to apply once, do their draw request, by semester or term or however they need it. And so it's very convenient. And also there are a lot of students going into grad school that maybe had a full tuition or scholarship ride for their undergrad, or maybe they didn't have to pay for their undergrad. And so this is the first time that they're paying for college or having that responsibility. And the parents will say, okay, now we paid for your undergrad, so now you're on your own for grad school. Kind of like in Dustin's situation, he used the graduate education line of credit, and it is awesome program. Again, great rates. And it works just like the undergrad, only it's just for the graduate student, and they may or may not need, a cosigner. If they want to use a cosigner, the rate would be based on the cosigner's credit score.
Yeah, hey Trisha, we had a couple good questions come in about grad. One specific to nursing, and that sort of depends on the nursing program if it's considered grad or undergrad, but eligible for both of those as long as your school is an approved school, meaning they qualify for federal student loans. There are several types of degree programs and certificate programs that credit unions have special programs for. So if you want to reach out to us on Facebook, or we've got a contact us on studentchoice.org, we can help you figure out if there's a different option, but the undergrad or grad line of credit would be available as long as the school is on the list there.
And Dustin or Tricia, do you happen to know, because I know that the government has been kind of recently going through different programs to decide whether or not they're quote going to be in the professional
Yeah.
bucket or not. Do you know where then that's going to determine, how much they can borrow? At least, do you know where
Right.
nursing is going to fall? I don't
We
know if
haven't
that's,
heard, yeah, we haven't heard specific because there's so many
No.
different flavors of nursing too, which is, different licensure and things that make it a little squishy, I guess, for lack of a better word. But either way, both of these, as long as it's an accredited school, you would be fine. The next one, which is really good, is with the new caps on lending, will private lenders favor grad students over undergrad? That's interesting. That is a question that we have scratched our heads on internally a little bit, because a lot of the credit unions that we work with, we're just working with them to make sure they have grad programs that are competitive and that can help now that Grad Plus is, no longer. So, in the credit union world and in the space of the clients that we work with, there are not any credit unions that are saying, let's throttle back our undergrad in favor of grad. And these are credit-based loans, right? So they're not saying, hey, listen, grad students are probably gonna make more money and pay us back quicker. Let's go there. Like, it's a little different because we're not maximizing profit, right? We're working on the principle is people helping people, and people before profits, right? So the credit unions that we're working with have not said, hey, we want more grad. What they have said is, we want to be sure that there's a grad option available since it's going away. So I can tell you, for the student choice side, at least, we're not pushing grad over undergrad. But what we are doing is making sure that the grad programs are as competitive as the undergrad. And you'll see a lot of times that they're literally the same rates. So we're just making sure that the options are as good for grad as they are for undergrad.
which is honestly very, very good to hear. I did put it in my comment because
Yeah.
I speak to a lot of lenders, and there have been a few lenders who have admitted that they will probably prioritize graduate loans under undergrad,
Yeah.
just, for all the reasons that you've just mentioned. So, and, everyone here tonight is really primarily for undergrad, so you'd rather
Yeah.
hear what Dustin had to say than what I had to say.
Yeah. Credit unions in general, I think they're, at the end of the day, they're happy to have a new member join the credit union and work with them. And their goal is to really help throughout your financial life. So for them, this is not about, maximizing profits and selling the loan. It's about
Right.
getting someone that's going to be a credit union member and help you, your family, your students through other financial decisions too. So There's some other really good questions in here. There's a ton, but I'm going to grab a couple that are really good, I think, for the group. Tricia, can you explain how the interest accrues? When does it actually kick in, and when does it go into repayment?
Sure. So interest begins to accrue as soon as the funds are dispersed to the school. So that very day. And then so it's accruing on, like say your limit is $100,000, but you only have a $10,000 balance. That's all you're accruing interest on. So again, not the full, because I get people that ask me that, am I charged interest on the full credit limit? No. So it begins to accrue the day that the funds are dispersed to the school.
Hmm.
And then, for instance, if you had a variable interest rate, I get this question a lot. So when does it change? So, it's going to be based on the prime rate. So let's just say you have a variable interest rate today and the prime rate changes today, then your rate will adjust the beginning of January, the following quarter. So, you've got the 4 quarters, January 1, April 1, July 1, October 1. So that's when, and depending on when the prime rate changes during that quarter, so it could be that your rate might not change till the first of the second quarter. So I know that was a little bit more information, but
No, it's good. It's good. You're not paying interest on top of interest until you actually graduate or leave the school. So,
right.
another good question, when do we apply? You can apply anytime, actually, for this. I work here. So I applied as soon as I knew I was going to grad school, and then literally 2 or 3 months later I went. So, but you can apply now for
Mhm.
next year if you want to just set the line up and be ready. For second semester, you could literally log on to it now and say, "Hey, Dustin, I need money in January." That's actually what a lot of people are doing right now. I love this one. This is just a call out. So this is for Leslie. Thank you. Is this a new thing, or has this been available over the years? I asked because I've never heard of this. This is an awesome question because credit unions are like the best kept secret in the financial space. The line of credit has been available now for going on 17 years since Student Choice started. We created it, um, but we haven't done like massive, advertising. We don't own any stadiums. We're not out doing naming rights or anything like that. So it has been definitely some word of mouth and catching up. 132,000 people have used it so far, so the word is getting out. But now I think the credit unions are more and more excited to get the word out. So you're hearing a lot more about it these days. So it's been around for a while, but it's definitely a new take on how you would apply for and pay for school versus, for individual loans, it's one that covers you the whole time. So I think that's an awesome question. Uh, Devin, did you see any other questions out there that you wanted to cover? I think the other one that I wanted to call out was credit scores for students. If they have no work history, that's totally okay. We know that students, if they're undergrad students, are going to have literally no credit. In some case, literally no file whatsoever, and that's okay. So we look at, and this is full transparency because you can literally find this on our site. If the student has zero credit, they can apply with a cosigner, and we just use that person's credit. So I apply with Trisha. She's got an 850. I'm good. Um, if I'm a grad student and I apply, if I have the higher credit or my co-borrower has the higher credit, we use whichever one's higher. So that way we're always giving the best. Um, and then Steve, I see you out there with twins. Good question on lines of credit. So in your case, if you have the twins, you'd have one line for each of them that is theirs. And then you, as the co-borrower, would have an aggregate total, meaning you can get more as the co-borrower, but each loan belongs to them individually. So they each would have 75,000 available, for example. But that way you don't have to have, multiple loans for each of them. But they do belong to each kid separately. Um, the other questions, lots of rate questions, which is fantastic. The other one was, where do we check these? Studentchoice.org, and it's all literally right there transparently. So we want to make sure you have that as well. Trisha, I'm going to go ahead and go to the next slide for you here because I think
Okay,
I think
perfect.
it'll answer actually a couple of the questions that popped up.
Yes. Okay, yeah, so I guess these were the top FAQs for this past peak season. So do you have to be a credit union member to apply? No, you don't. But to fund the loan, you would need to become a member. And most of the time, it's just the student borrower that would have to become a member. Some credit unions do require both the borrower and the cosigner. And opening an account is easy with the credit union. It's basically just, they call it a membership savings account. And usually it's just a $5 minimum balance fee. Sometimes they even deposit that for you. Is this like a home equity line of credit or a HELOC? No, you don't use any type, so there's no type of collateral. It's designed especially just for college cost and college needs. And does my rate change each semester? Only if you choose a variable rate. It may change based on the prime rate, just like we explained a few minutes ago. If you select fixed, the rate stays the same the entire life of the loan, regardless of the market changes. And then how and when do we access the funds? Again, I think we've talked about this a lot. Once the line of credit is established, boom, you simply log in, tell the credit union how much you need, which is called a draw request, and then that request is sent to the school for certification.
Yeah,
So
thank you,
Tricia,
Trisha.
going back to the question about, does my rate change? I understand that the rate for the fixed rate stay the same, but what if during the time that my student is in college, the, interest rates actually drop and I've chosen a fixed rate? Is there any way to reapply to get the lower rate that might be out there?
If it's a variable rate and the rates drop, most of the time that rate, the student's rate will drop as well. So it's going to follow the market if I choose a variable rate. Was that your question,
No,
Deb?
it's really more for a fixed rate. What if I've chosen a fixed
Oh, a
rate?
fixed rate. Yeah, I mean, you technically can, but then that line of credit would have to be closed and then you would have it to open up a second line of credit.
Okay, but
Yeah.
just in case, I
But
mean, who
it
knows?
is possible. Yes,
Yeah,
absolutely possible.
okay.
Debbie, I'm a big penny pincher, so my answer is absolutely. You should do that. I
You're
am
watching the rates all the time.
all the time. Yeah.
Yes,
I'm a big fan of do what's best for you. I mean,
right.
there are absolutely going to be scenarios where you'll check the rates at the credit union. They're going to be awesome rates, but if you can get an awesomer rate elsewhere, you might do that. Like we get that. There's always situations,
Right.
but yeah, you gotta do what's best for your family.
Right.
One really good question about the line of credit and credit unions, which I know sounds confusing because of the name credit there, but not every credit union in the United States is a student choice client. So they're not a partner of student choice, meaning we don't work with every credit union in the US. We'd love to let them know, but what we do is we have a 212 credit unions across the country. We cover the entire country. So no matter where you live, you can always qualify for a credit union. There's several that serve literally the whole US. So if you go to Google and you say, credit union near me, you could definitely find a credit union that does not offer an education line of credit because they don't work yet with student choice. However, if you go to studentchoice.org and you type in your zip code, you can also put in where you work or where you worship, because a lot of credit unions serve those groups individually, and put in your school because they also serve the college. We'll match you with oftentimes 5 or 6 credit unions that you can choose the best rate or one you recognize. But no matter where you live in the U.S., you will absolutely find one. It might not be the credit union that's right down the road because they might not have partnered with us, but that's totally okay. I'm in Dayton, Ohio, and I'm a member of a credit union in Boston. They have really good rates. So, and they're awesome. They're a partner of Student Choice too, and they're a really good credit union, and I've been a member there for years. I'm also a member at my local one. So, again, do what's best for you, and that's totally okay. And you'll find that on studentchoice.org. Um, One that I found that's really good, and I think that as we're wrapping up here, Tricia, this is a good note. We do have lots of specialty programs. As things are changing, lots of specialty programs are coming up. So those of you that are educators or nurses, they're med professionals, uh, there's tons of really good options for both credit unions that serve them in those professions, and also the line of credit that can help you go get an education in those lines. So it definitely options across the board there, but definitely just compare the rates, pick the one that's best for you.
Dustin, there's a question about a divorced family. Can both parents, I guess, be a co-borrower? Could they take out two lines of credit for one student?
Yeah, good question. Trisha, I know you've run into that. Do you want to take that one?
Sure. So the limit's going to be based on the student borrower. But yes, both parents can take and split that. So one parent could have a line of credit and the other parent could have a line of credit as well. But there is a limit per lender. Say maybe it's $100,000 per student borrower. So that student wouldn't be able to have a $100,000 line of credit with mom and a $100,000 line of credit with dad, but they could do 50-50.
And there's a question from a grandparent asking if there's any age limit to be a co-borrower.
No. As long, there's, of course, income requirements and, verification of income, but as long as all those requirements are met, yeah, no age limit.
So
Well, I should say there could be, we do have some lenders where the student has to be 18, or if they're only 17, they have to have a cosigner. But
So
I think they're,
go ahead.
no, go ahead.
Well, this is slightly different, but what about in the case where the parent is saying they really want to be the sole person responsible for paying back the loan? Can they be the borrower, and not does the student have to be involved? So basically, can the line of credit be in the name of the parent only?
Work like a parent loan. Yeah.
Yeah.
There are a few credit unions that have done something like that. It's not in mass, where it's listed on studentchoice.org, but the parent can absolutely just make the payments, right? And it benefits the student's credit.
Right.
So I used to,
Right.
before joining Student Choice, I was with a credit union doing this. And that's what a lot would do. They say, hey, I'm going to make the payments because I'm going to help you build your credit. But they said, hey, I want to take the loan. Trisha, have you ever seen any parents take the loan over from the student after repayment?
Yes, yes. So like once they graduate and they want to do like a student loan refinance, I've had parents just refinance it in their name only.
What about timing for when parents should think about, signing up for the line of credit, parents and students? So just to kind of like make it clear, families should wait until their student accepts at a college.
No, anytime.
Yeah.
You can apply whether you know where you're going to school or how much money you need.
Right.
Since it's flexible, we don't care where you're going to school as long as you pick a school that's, eligible for federal funds, you're pretty much good to go. You can go back into your account later and say, hey, I chose Ohio State, or, wherever you're located. So, yeah, you can do that anytime.
Yeah, that's what I had mentioned that earlier. I know we've shared a lot of information though, but that's one of my favorite things. Like if you have a student that's going to school next year for the 26, 27, you can actually open up the line of credit now if you wanted to. You just have to make a one draw request within the first 18 months.
I'm going to make a suggestion for you guys for next time we present. You need a slide that actually compares the education line of credit to a traditional student loan. Because I think some of these questions, are coming up because
I agree.
you were thinking about like what you'd have to do with a traditional student loan, and and the line of credit offers a lot more flexibility and options.
Yeah, no, I agree. I think I think you'll see one of those on the website soon. We're doing some, yeah, we're doing some updates, so that's a good one.
Yeah, that is good. Good
There's
point.
lots of
Thank you, Debbie.
questions about student credit and credit cards and like what we should do to establish their credit early. For this loan in particular, right? I'm not a financial advisor, and you should definitely ask, ask the credit union or ask your financial advisor what they recommend. But personal opinion, beware of credit cards with your high school students. Unless the card's in their name or they're joint, they're not going to get the benefit anyway. So I would let them establish it naturally. Having one credit card for 6 months is not going to make their credit so good that they get the loan by themselves. So I would personally err on the side of protecting their credit early and let them build it naturally versus trying to supplement it early and boost it up. But I would say for your situation, make sure that you just check with your financial advisor or credit union on it. But you don't have to do that to get an education line of credit. Your student does not need to have credit to get that.
And for the student and the parent as the co-borrower, does the when they take a a draw, does that go on the student's credit as in addition to going on the parents?
Yes.
Okay, so it's in both places.
Yeah. That's what's nice as well, because the student is actually establishing credit while they're in school.
Mm-hmm. Mm-hmm. Somebody's asking, what's the limit on the line of credit, or is there one?
There is. It varies by
Mhm.
credit union, but typically it's 75,000 for an undergrad student, and then usually 100,000 for a grad student. And then if you decide to refinance, it can change from there.
And there's another question about if a student needs funds for things like transportation, groceries, etc. Do those payments be made directly to the student?
No, but it's real easy. That question is so common. So everything, has to be dispersed to the school. So what you're going to do is include that amount in the draw request with the tuition and stuff. And then when those funds go to the school looks and says, okay, nothing is owed. The student doesn't owe us any money for tuition or fees. So they will send a refund to the student. And the student can actually set up a direct deposit so the school can do an electronic transfer. But that happens all the time with students, like for room and board and those types of expenses. But the funds always are dispersed directly to the school.
And there's another question, and a few people have asked this, and I realized we didn't focus today really on federal loans, but people are asking, can they take out the line of credit in addition to federal loans?
Absolutely.
Yep. Yeah, the federal loans, we always err on the side of, we call it free, cheap, and gap, right? Take the free money, scholarships, grants, tuition discounts, take that first. You don't have to pay it back. Then take the cheap money, which historically has been a federal student loan. Now you want to compare rates and fees and just make sure that your financial situation makes sense. Compare and somebody asked this, there's no fees to apply, take a draw, make a payment. There's no extra fees on this education line of credit.
Right.
But then if you exhaust all your federal funds, then you want to look into, private funding. So yeah, definitely, we always want you to look at your federal loans first and make sure, because you never know, they might get forgiven. There might be, new legislation that happens. So it's typically in your best interest to keep those. And they've got the repayment benefits that Tricia mentioned. So again, free, cheap, gap. So scholarships, grants, tuition discounts, federal loans, then private.
Yeah. When I'm having counseling sessions and financial literacy consultations, I always talk about the federal student loans first and compare all of them.
Yep.
Okay. Well, lots of great questions and lots of really good information from Dustin and Tricia. Thank you so much. I'm really going to thank all the parents that showed up tonight because this is honestly a topic that's a little early for us, because I know families and students are still finishing applications. So we kind of, don't usually talk about the funding until all those applications are in. But I think this is such a great product and service from the credit unions. And as you know, that families should know about it early and to put yourself, give yourself a little peace of mind and and open up a line of credit just to know that you have it and everything you learned tonight, you don't have to use it right away, but at least you'll know that it's available. So, definitely check out Student Choice and thank you, Dustin and Trisha.
Yeah, absolutely. Debbie, there were a ton of awesome
Thank
questions.
you.
I know we didn't get to all of them. If you want us to follow up with anyone, we're happy to do so, or feel free to provide our info, and we'll make sure that we have time, obviously, to help everybody out that has questions. Awesome questions. We're sorry we can't get to them all. We would love to, but
Yeah,
thank
and
you.
and everybody will get email tomorrow with the link to the recording. And Dustin, I'll follow up with you and Devin afterwards. If there's a particular email you want me to
Sure.
share in that, email address so that people can reach out, we'll include that as well.
Perfect.
Okay. Thank you, everyone. Good night.
Thank you everyone for joining us,
Yeah, thanks
for
everyone.
all
Have a
the
nice night.
for all the questions.
Bye.
Bye.